Good morning, guys. Welcome to this Wednesday, February 11th. And we got a market which is backed off a little bit in the overnight. They did not hold on to their gains. Well, kind of, but not by any means with it looking like a strong show. And that's kind of holding here, kind of twisting in the wind, waiting for the employment situation coming out today. So today we get news. The employment situation was supposed to come out Friday, coming out today. Oil report and then a 10-year auction, but the 8:30 gets a little bit rowdy when we get that report come out. Now, I would just, I mean, you can see we are right back here. This big rotation down we had, the big run down here, it's pretty much been reversed. We are back holding the 6950s. And I would say that we have a shot at holding this together. I mean, it's still early in February, and but as days go, and we're not seeing that the weakness or the desire to tank the market, and any of these sell-offs is getting bought, and that's a good sign. So overall, I think people's outlook is optimistic and to the upside. It just had to get through the volatility when it happens. So it's, I mean, right now going into this trading day, I would start off flat out range bound, waiting for the employment situation, then see what the market does after that. So initially, if the reaction is volatile but not directional, in other words, going to swing back and forth wildly, and then after a while it's going to settle in. Okay, fine. Then we go fast forward back on the analysis, flat out range bound. Look to sell strength up to that 7,025 30s. Look to buy weakness all the way down here to the lower area at the 68.80s. So this whole value range is still very much the area we are trading in. If it is a directional move, in other words, it moves, looks like it's taking out the direction on one side or the other. Initially, we look to trade that direction, and then we'll see. Sometimes you get that direction, and the key really is like you're waiting for the first balance bar, the first inside bar to form. And when that forms, you have an idea when the next bar comes out of that direction, what side you want to be on. Now, sometimes you get faked out. Yeah, it doesn't work all the time, but it is a pretty no-brainer trade, and it's pretty much a continuation trade. So you're looking for the market to they have a big direction. You're looking for a little balance bar to form, and the market's trying to figure out where to go. And then you need to just watch the direction you start coming out of that balance. And depending on what time frame you're looking at, you may have a fake out or it may have a little variation on it. You just have to, if you want to wait for a second directional bar after that, you can do so in a little bit more confirmation. But you're looking to trade primarily that direction. And if it doesn't look like it's working, chances are that big bar, the directional bar retraces, and that's another type of a trade. So those are the two big newsday kind of options you have in front of you. If it does, as I said, if it does swings back and forth, and then wildly this crazy stuff happening, but it doesn't move directionally, and again, it's going to be moved, but it's not going to be like a one big directional bar. Then you just go fall back on the analysis and look to sell strength up to the 7,025s, buy weakness down to that 68.80s, and then we just wait for the market to figure out if it wants to break out of that range at one point. So initially, given where we are right now, looking to sell strength up against the I could have put in an edge up here, right here at the 69.75, the high of the London session, but I opted to stay on the support area side of it. So it's just getting a bit too crowded. If I make this one a big range, it just gets too crowded. It's just hard to see anything. So initially, I'm looking to sell strength up against the 69.85s and 7,000, 7,010, 7,020, and 25s for rotations down. And on the way down, looking to buy weakness against that 69.50s. I put in a little tiny baby edge there because it's it's a very tight range, but it looks like a little attractive spot at 69.63. I'll show you that if I remove my F1 from here, you'll see what I was looking at. So you see here, you go over here, you have a high for a day session, almost there. You have a mode on that prior distribution. All that aligns with that specific price level. So, and it may be some importance there. So I marked it up. But initially looking to buy against that, buy against the 55s, the 35s, 20s, 69, 10, 69, 68, yeah, 6900 rotations up. And it goes all the way down here to that 68, the outer edges. But you get the drift. You're looking to sell strength, buy weakness. You're pretty much in the same range. And you're just looking at see if the market is going to try to get on some sort of a trend after the news settles. I mean, you're waiting for that news reaction to settle in, and then let's see what the market does after that. So the only no-brainer one would be a big directional bar where you have an opportunity to just try a go with type of trade, or potentially a reversal if it doesn't look like it's working out on the continuation. So that's how we get started, and see how that employment situation starts shaking out. So they're going to sell strength up against the 85s, 7,000s, 7,010, 20 up to the 25s, rotations back down. Looking to buy weakness against that 63s, the 63s, the 55s, 35s, 25s, 10 and 6900s rotations up. I didn't mark anything up in between. There could be an edge right about there in the middle, but you can see how they ran across that here on the way up, and it's kind of way back there, so a few days back. So I'm not going to mark it up. Try to not mark too much up. If it gets too crowded, it's hard to figure out when you're breaking out, when you're getting into a resistance support area. This whole area is still a little bit crowded as it is. On the NASDAQ, this guy is looking pretty weaker still. It hasn't not been able to get back up to that 25,700s. Holding right at that thing, holding below it at that at the reverse retest area, if you wish, of this prior distribution. And I would say same story there with range bound trading, but I would be inclined to lean towards the short side on the Nasdaq if they can't, if it looks like it's starting to get weak. Nasdaq has been showing a lot more weakness than the ES has, so Nasdaq is also a lot sensitive. There's been a lot of selling in those big tech stocks, so not surprisingly if that one heads south if there's an issue with the employment situation. So initially looking to sell strength against the 270s, 330s, 330 to 40s, 390s, 430s, rotations down. I'm going to buy weakness against the 200s, 150s, 100s for rotations back up. If it starts trading below that 100s, I think that's going to be 100 is going to be around about here. You still have a range here before you really start hitting some significant support areas, but it could be a nice short trade running it right down here to test these lower support areas, the 25,000 and the 24,960s. But there's a watch for that. If that starts happening, you start taking out support here at the 150 and 100s. Could be a nice short trade in there, just running it down there. Again, same story there. Employment situation, directional move or not, it's going to be the same dynamic here on the NASDAQ as we said on the ES. And then let's see how that develops when the craziness has settled down a bit. So above, if it starts trading above that 440s, 430, 440s up here, I would be inclined to look for a rotation up here to that 680 to 700s. That could be a nice go with type of trade as well if they break out of that level. So I will watch for that breakout on the upside. I would watch for them to take out the 100. Well, that's so above the 430. I would look for a long trade up there. Below the 100, I would look for a short retracement trade down here to the 950, 960s, and in between, that's trade and flat up range bound. Let's look to buy against the 200s. 150, 100s, rotations up. I'm going to sell strength to 70s, 340s, 330 to 340s, 380, 390s up to the 430s there for rotations down. So that's kind of how we get started. And anything can change after the employment situation. Now, I don't know if it's going to be a big reaction or not. It's anyone's guess. So you just have to wait and see how it shakes out. And don't click in my mistake from yesterday. Click in water just before news. Yeah, I mean that's like sometimes you shake your head, you bang your head against the wall. Like what was I thinking? See, keeping everything in your head when you trade. It says it is. It's an art. Anyway, so the bond market looks like they're trying to take this higher again. So, okay, so they are heading up here towards these upper areas. And they're heading up to this upper ledge right near the little attractor area at the 117s. So it looks to me like we have a shot here now at trading a little bit higher. So I'm going to be a little less aggressive on my shorts, looking at watching this whole thing shake out. And but again, watch that news reaction. Same story there. Big directional bar. You're trying to trade that news reaction. If it's just volatile and non-directional, just fall back on analysis. And I would look to buy against support against the 1616 and the 1610s for rotations up. And I would be looking for short against the 22s, against the 170, just a little bit less aggressively. See how this shakes out. And as you can see in the overnight, you can't take those flat out areas. They sometimes work, sometimes not, but you can see areas where they absolutely go sideways for a while. You're looking for a little bit more range before you start looking for those setups. Yesterday we had great range. It's just that the market was just, you can see here, it was just not range bound. They were heading higher until they ran out of gas here, like a point higher. So, and that was just nothing you can do about it. So you're looking for shorts against resistance if you have a setup. Yeah, by all means take it. Same thing there. You're looking for support. You're looking for failure against support. And if the market just trades lower and you see a setup like that, it says you're gonna have to take it. It's just you just put a stop in the market, and if you're wrong, you're wrong. So that's just trading. Because you're trading on the you can't pick and choose the setups really. You have to kind of try to take them, otherwise you're just kind of guessing. So when you get a good setup, you take it, and then if it doesn't work out, it doesn't work out. That's how the market. Yes, that's just how the market is. Anyway, so back to the ES. So we have news in about 10 minutes. I'm not going to click in any orders prior to that. I'm just going to watch for that whole thing to shake out. Yeah, it reacts. Also, I mean, I'm sitting here pretty actively working on the Coinbase integration, starting to trade the Coinbase futures. I talked to you about that before, that the integration is getting there for sure. It is a very different animal. And then the market, I was trading these futures last night, and it's they move and they're volatile, but it's not crazy volatile, but it is an interesting one. So it's going to be available here and hopefully in short order. Yes, there's going to be a period of testing on it to make sure, because they have some odd order management behaviors to kind of understand and work in. But thought I would give you an update on that. But that trade integration is working now, and I'm just testing and fixing stuff and trying to figure out all the little quirks in that order entry and stuff like that. Alrighty, guys. We'll leave it there for now. So good trading. I'll see you guys back at 11:30 for the next update. Alrighty, guys. Later.